Last week I put out a series of videos, quick short videos on just my thoughts about what's happening to the markets and are we going into a full-blown correction or are we just going to get a shallow pullback? And I covered the price action in SPY, QQQ, and DIA. And all these, as you know, are ETFs which follow or mimic the price movement of Nasdaq, Dow Jones, and S&P 500. Now, in the video on DIA, which is Dow Jones ETF, I had pointed out that although QQQ, which is the index, which is the ETF which follows Nasdaq, and SPY were looking really weak, but Dow Jones had somehow managed to hold its ground and was kind of stuck in a sideways movement. So if you look at the chart, I pulled up the chart for DIA today for you. When I made that video, Dow Jones was somewhere around here. And I had pointed out that when the Bollinger Bands, which is the red line and the green line, when the Bollinger Bands get trapped inside the Keltner channels, which are the three gray lines, a stock or ETF usually starts going into a sideways or consolidation phase, and there is usually hardly any price movement that you will see. It just chops around in that area. I had also pointed out by adding an indicator called TTM Squeeze, which I'm going to add right now to show you what was happening at that time and what's happening now. I had pointed out that TTM Squeeze is showing these red dots. So whenever those red dots start appearing, you should expect, first of all, little to no price movement for now, but it also indicates that an explosive price movement is just coming up. The only thing it cannot predict is when that's going to come up, but it's telling you that there is some kind of explosive price movement right around the corner. And how you gauge when that price movement starts is you wait for these green dots to start appearing. And I also mentioned that like every indicator, TTM Squeeze does generate false positives. So I prefer to wait for 3 green dots in a row to confirm that the stock is breaking out of its squeeze period and it has picked a direction. In this case, at least for as of today, it appears we have these 4 dots and the bars are increasing in size. That means the downward momentum is picking up steam. Now, given that tomorrow we have NVDA earnings and NVIDIA has become that kind of a stock, which is a market moving stock. One blowout earnings and it can completely change the entire market's direction. So it's a binary event which is going to happen tomorrow, but let's pretend that that's not there and just use technical analysis. So based on what we are seeing right now is the DIA has broken out of its trading range and the squeeze is firing to the downside. When that happens, usually there is an explosive move and the downside price target, I'm guessing, would be around 330, could be 335 easily, 335 somewhere over here, which also happens to be area of support. Let's say 335, 336, around that area. So I would expect, if NVIDIA doesn't do something crazy, that Dow Jones continues to fall until it hits 336 or 335, and then maybe we can see a short-term bounce. Now, another thing that TTM Squeeze really helps you spot is when that bounce is coming up. So once you start seeing these the green dots appearing after a squeeze period, which is the red dots, if you are a directional trader, you actually start trading in that direction in which the squeeze is firing. In this case, it's to the downside. Now, this could keep going on. We don't know when it's going to stop, but what you're looking for is these yellowish bars beginning to appear. Let's pull up a 9-month chart. I think I showed you a 9-month chart last time of another squeeze that fired. So I think I showed you this example. So several red dots, and it's very obvious that Dow Jones was just stuck in a squeeze or sideways movement, very choppy period, and then it broke out on this date, 217, 217, and then on 223, 24, 25, these 3 days is when you got a confirmation from TTM Squeeze that this stock or DIA is actually heading down. Now, of course, you can always have some choppy pullbacks or dead cat bounces, which is what happened here. But if you look at the overall direction, this was a 3 week correction that happened after TTM Squeeze fired. Now, when you see those yellow dots, those yellow bars beginning to appear, that's when you would just become cautious, because those are the times when actually stocks turn around. In this case, you can clearly see it was a false positive. Uh, but then, if you move forward, end of the correction, which is on this date, 315, you can see that the yellow bars are beginning to appear. And then, if you were cautious and not taking bearish trades, you wouldn't get hurt. In fact, that is the time when you wait for markets to turn around and start taking the opposite trades, in this case those are bullish trades. So that's what's happening right now with DIA, and all I'm watching for is I'll be bearish until the time I start seeing those yellow bars beginning to appear, and then based on market conditions we can make a judgment if this correction or pullback is over.